Hi,
All
Patrick.
right. Well, hey, thanks for having me. Really appreciate that.
Well,
And
it's great to have you. You reached out, and maybe it's a message to people that once in a while you take some action, and you can be rewarded for the action. So, um, great to have you here. Why don't we start off like I usually do and tell us a little bit about your journey? If you want to use a camera, that's fine too. If not, if you look like I do in the morning, like this, you don't have to. But
hey, there we
anyway, there.
go.
All right, so there you are. So, how'd you get into the business?
Okay. I was part of running a small business when I was much younger and got into the business probably a little later than most people, pretty far along in my 20s, and got an opportunity, got in, passed the test, and then looked around and said, "Hey, I have to, be somewhere where I can build a career." And I clawed my way. It was quite an episode to get into what was A.G. Edwards at the time in the late '90s. Um,
Good
had a
firm.
great conversation with the manager, and then at the end of it, he looked at me and said, "Well, what separates you from the 22 other guys in the last 3 days that sat in that seat?" So um, ended up working out okay. We worked
What'd you
hard.
tell them?
I told him I'll prove that out to you as we go forward, because it was at the end of like what I felt like I said was everything.
Yeah.
So he was a veteran. He waited till the tank was empty, and then he asked the hammer question. So,
Okay. All right.
but
So you didn't like cold calling, huh? How many dials did you make a day at AG Edwards?
uh, I wasn't in that at Edwards. I broke in that type of scenario. My max was around a little over 200.
Yeah.
And I was in one of those rooms, and you'd see guys like, talking about 300 plus, and the old term would
Oh yeah.
would, would come around, and that was a unique experience.
So you spent some time in a boiler room. How long did you last in a
I
boiler room?
was I was in there a few years. I did the account opener,
Wow.
the pass the test, and the
Yeah.
we're a cold caller, pass the test, account
Uh-huh.
opener, and then you go on, and you're at that point where you're either going to go on and do business, or you realize, you look around, you're like, I gotta, and that was the break to AJ Edwards.
What was
And
your rip? The
what's
Your
that?
part of the spread, the rip
I,
they called it.
oh, yeah, there was
What kind of were they all OTC and pink sheet and bulletin board companies?
there was a lot of that, and would share a story on a big board stock, and
Yeah. Oh, okay.
you know, but
Just to
that was
make you
back.
look legitimate.
That was back when the Asian crisis was going on with the Thai baht. That was with the got to see the ruble devaluation. Saw Lehman Brothers trade from 25 to 12. I recall that.
Wow.
Um, I
Yeah.
think I can mention them, being as they're not even possible to invest in. So it's
Yeah.
not breaching any compliance
All right.
rules.
So you explained to me that you're not an RIA, but that you manage funds.
Mhm.
And over the years, you've developed some things that you want to give back to the FACE community. How long have you been attending FACE webinars, Patrick?
Oh heavens! I'm not even sure that I think it's at least a year,
Okay.
and
Yeah.
I could get you guys posted on my website, try and drive as much traffic there as I can. But this is the fabulous morning show, period. And I'm a believer that I'm one of those advocate type people. When somebody is doing something great, it's great to tune in. You should get as much of that out there as you can.
Okay. Well, we appreciate that. Hope we're adding value to what you're trying to accomplish, but you're here to give back. Okay. So tell us what you've developed and how you're looking at the markets now. And if you want to share the screen, you just go to the bottom and click share screen, and you could show us what you do, and
Mhm.
how you manage money.
Sure. One of the bright spots of tuning in here is it. I look at it as all hands on deck. I have to be super macro, comprehensive of what's going on in the fiscal condition and the on the planet and here with the reserve currency and all of that. So that's the condition under which we're all making decisions on any given day. Beneath that, I basically built an infrastructure that monitors this. So it's a data front end of the business that gives me a clean view of the data that I've assembled over 27 years, or this is year 27 now. I used to be a young guy in the office.
9 threes.
Yeah, hey, there we go. And so that data and the cleaning of that data, the prioritization of it, the weeding out the coincident and laggings and turning it into the concentrating on the forwards really starts to give you a look at not only something that has the ability to be interpreted, but you have to I think there's a fair amount of interpretation that's hugely necessary. You have to know what you're interpreting. The best data in the wrong hands is not worth the paper it's printed on. So when you take that over and you're interpreting it into the system that I started to explain, that's super macro, macro cyclical, like we're used to, and what's jobs, what's sentiment, are we expansion, are we contraction, are we topping, where do we think we are? All of that's imperative prior to what asset classes do best.
All right,
So
what's your stuff saying in here after last week's Thunderbolt?
sure, the big picture is we're super macro ugly, I would call it. And so that's a caution sign. And then macro cyclically, if we look at it as like the little volcano chart where the left side is expansion, the topping is the zigzag across the top, and the right side is contraction. I have us, just in my view and my interpretation, going over the right hand side. That's where the separation of markets and their behavior and separation of actual underlying data can occur.
So
So
how are you investing or not investing with what
mhm,
you're seeing with a super bad macro? And macro could be very long term, and there could be cyclical stuff that happens within secular stuff. So
mhm,
you missed big rallies. Your clients aren't happy if they see the
mhm.
market going up and they're not participating. So what do you do in this market?
Right. Right now, I'm defensive. I don't feel like what we're seeing out there right now has a justification to it. So I can't go into specifics. Obviously, if anybody wants to contact me, my info's out there. But and we can go into more specifics on a one-on-one basis. But in a general sense, very defensive. My defense is on the field. There is a portion below the macro cyclical, the normal stuff we hear about production and jobs and all of that. That's the intra cyclical, which you were describing. There are, if you picture a bell curve, tail left and tail right. We tend to, as humans, be geared towards or just pre-programmed towards long only. It's a two-way market, and if you look at some of the most successful people in the history of what we do for a living, they understand both the long side and the non-long side, offensive and defense. So I'm positioned defensively. I don't think this giant
Are bonds
surge.
part of your defensive strategy? Because it wasn't a good defensive strategy up
Mhm.
until a few weeks ago.
Right, and I agree with you. They have not been, and they
But could they
currently
be?
aren't. They could be. If you look at tradition, Sir John Templeton, it's never different. When you get into the cycles and the big pictures, you really can line up some very good and interesting data by looking at some of the main headlines in the news and just throwing them on a chart together. And you'll see an order of operation between things like Fed funds, um, uh, uh, producer price index, some of the popular orders of operation that they're talking about, and you want to make sure you have those right. Um, Surges, we're probably going to have a currency surge, and that's probably going to lead to a risk off.
Which
Um,
currency?
yeah, I can't go into details, but
You can't say. You
let's
can't
call
say.
flight. I I can't, but let's call it flight to safety.
Okay.
And for everybody on your end, you'll know exactly which two or three currencies that would be. And it ends up being a risk off in what I feel is the next couple of quarters. I'm a Lakshman Achetan fan.
Oh
He's
yeah.
yeah, I think he does an amazing job.
Yeah,
I'm
I've
thankful.
interviewed him a handful of times. I like
He's
Lakshman.
he's right up there with Bill Gates and people I might just like randomly hug if I met him.
Oh, I
he's
wouldn't hug Bill Gates. I'd
it,
strangle him.
well, I mean, my thankfulness of productivity from Excel.
Okay.
I stay out of political judgment
All
and
right.
any of that
Anyway.
stuff.
All right. But I'd hug Lakshman.
Yeah,
But
great guy.
anyway, all right. So it sounds like you can't be specific about anything. What are we going to accomplish in the next 10, 15 minutes? Where do you want to go?
We could look at a couple of things in general just to add a little bit of value. How do we do a screen share here? I do that. Something pops up.
Yeah.
And you had mentioned yesterday, so I have a few of these in the wings. Can you see that? Did I do it correctly?
No, you click the,
Oop,
yeah, it's coming up now. Yeah, data
okay.
matters, and you have the 10-year treasury constant maturity minus 2-year constant maturity.
Yeah,
Okay.
tens, twos, the yield curve.
Yeah. Yeah.
You know,
Okay.
whether we're a trader or whether we're a macro or whether we're somebody tuning in, if you take a look, the gray bars pretty much speak for themselves.
Yeah.
And to be paid attention to. So if we're looking at the big picture of, get the most out of the maximus out of a bull market, and then maybe know when to start being maybe a little more cautious. I think you have some interesting
Where
um
was that? What year was that for the biggest inversion all the way to the left? What year was
uh
that?
that's the early 80s.
Okay, yeah, it was yeah, that was right after Volcker or during
Mm-hmm.
Volcker. Okay.
No, also just to mention there's this is the tens twos. So for
Yeah.
the 2 year, the tens 3 months will show a more exaggerated, much more in line with
So
the
you're in the camp that's saying it's really not different this time, that this yield this inversion of the yield curve is going to play out into a recession.
I feel this difference, it's different this time, comes out every time and doesn't really stand the test of time.
Okay. All
So
right. What else do you have to show us?
a little bit of sentiment. University of Michigan, always a great, you know,
Consumer sentiment. Okay, so consumers aren't that confident if
no.
that's a fairly recent chart, right?
Yeah, these are through August, which is my
Okay.
my recent compliance trip that I took. I update them usually quarterly,
Okay.
but as you get different data sources, we just looked at a yield curve. Now we're looking at what consumers think. Sort of some rhyming going on there. I'm going to pull this down just to
How do you
give.
account for all the massive travel that took place this summer and consumer spending holding up? Um,
Mhm.
with the consumer not feeling good, do they just go into debt to feel good and keep spending to feel good?
You look at some of the debt numbers. Some of the debt numbers have risen. Some of the credit card numbers are under pressure. Um, I go back to 2021 with the big surge of capital coming out into the public. from all the different programs. And at the time, I'll have some posts on the website that highlight some of my thoughts. And at the time, then I read a newsletter. It was gasoline on a campfire. It's not a bonfire. It'll eventually go out, and somebody hands you the bill for the gas bill, and it has to be paid. Which is where I feel we are now. It was not genuine, in my view, economic prosperity that just lasts
Oh
into
yeah.
the next bull market.
Yeah. Okay. Um, Anything else you want to share with us today, Patrick? I mean, if we can't talk about specific instruments and actionable things,
Mm-hmm.
um, can you talk about your book and how you have them positioned? I'm sure the FINRA wouldn't care about that.
I'm defensive,
Okay, and what is that?
fully.
Tell me what are you in cash? Some people buy staples, some people buy bonds, some people consider gold defensive. So
Mhm.
defensive is really a broad category.
It
So,
is. My lean and my history and my exposure is to the institutional side, to the folks who are in the whether it's a commodity based or hard asset, the folks that can go both long and short in those areas.
mhm.
So I don't think I'm divulging any individual
Do you like
investments
gold?
there.
How about for yourself? You have any gold coins in a
I
coffee can?
no, no bunkers, anything like that. We've been through a bunch of recessions in the history of the country, and
Uh,
I feel that the efficiency is knowing from these charts that I'm showing you. The one we just threw up now is industrial production, which rhymes with the others.
yeah.
And when you're looking at it from so many different points, you can adjust to be like we said, non-offensive, or limit your drawdown is what you want to
Do
do.
you think that do you have confidence in the US financial system, the banking system where we keep having regionals go away, usually over the weekend so no one notices and
Mm-hmm.
charts like the KRE really didn't participate in this rally and then we have a little glitch in the banking system that can't clear deposits. That was a new one over the weekend.
Mm-hmm.
Um, do you believe that there are safe banks and there are banks that aren't as safe? What's your take on what's happening with the banking system?
Mm-hmm.
And then wrap it with, do you ever think about central bank digital currencies being part of our future?
Okay. Bank situation I would call ugly, just in a general collateral sense. A bank runs off of, in a very broad set of terms, its collected collateral, which is usually some combination of treasuries and some combination of mortgages they've either issued or portfolios they run in that aspect. And when rates ramp from,
Yeah.
two to five or 2 to 4 and change, those collateral prices contract if they weren't under a year. And mortgages are a little longer, they suffer the same thing. And in the mortgage world or the asset backed world, we're starting to see the underlying asset have some problems.
Okay.
So
What bank does Summit Financial Networks use and Cetera Advisor? Where do they domicile their funds? They use
I clear through BNY Mellon Pershing.
okay. So Mellon
Mhm.
Bank is probably it's been around a long time. So do you
Yes.
personally use Mellon Bank?
uh, it's where my business is, so that
Okay.
that is my vote of confidence right there.
Okay.
Moving on to the digital currency throws me a little bit, and the adoption broadly by major governments. Um, I I feel that it's almost too traceable. It looks like they're trying to think about a direction there to go in. I don't know that we're going to see an overthrow into an immediately trackable currency, regardless of and that never waste a good panic or whatever it is they talk about. It could. It's speculation, so I try not to speculate too much. But if it did happen, we would certainly clean up where capital goes, and eyes would be on it everywhere. Whether it was,
Yeah.
tracking where Washington capital goes, or
Yeah.
where yours and my capital goes, or somebody on the street corner. So that would suddenly have that effect. And I don't know if everyone's prepared in the whole system to vote that in.
Oh
You know,
yeah. Yeah. Do you think there'll be a vote like a congressional act? I mean, it is changing the money,
it
and
would.
it isn't coming from the Treasury. It's because it's not called a Treasury
Mhm.
digital currency. It's a central bank digital currency.
A global move is a little bit of a different opinion. My addressing was for our central bank. I think we may have touched on that when we spoke yesterday, but globally, substitute for the dollar is a tough thing because we do still offer quite a bit of backing versus everything else.
With what, our army?
Well, with the, as comparison, who else is going to offer something more solid where, we don't really have government takeovers that
Oh, you
regularly.
mean
We
coup d'etats?
the whole thing.
Oh,
I think if you
okay.
compare us around the world, we are still, I don't even know if you'd call us a dirty shirt. We can stand some cleaning, but
Okay.
I think we're still in control of the global reserve currency, and I think everybody's, reasonably okay with that.
King
I
dollar, King dollar. So, Patrick,
is
for people that are listening to you live and see the video later,
mhm.
best way for them to reach out to you to talk to you would be
PatrickTBulger.com. You'll
okay.
see you can sign up for the contact us or the free newsletter and updates. I do newsletters quarterly. I do them timely. If I see things getting crazy, you can find me out on LinkedIn. Just go and search PatrickTBulger.com or Patrick T. Bulger. You'll see my posts. Timeliness of posts. You'll see the December post from last year that called and highlighted highly likely to have a banking issue. And that was
Oh,
90 days before they hit home.
okay.
So it's not really me, it's the data, and the interpretation. So it does have a forward look, it does have a value. And I think it pays for all of us to have clean data
All
and
right. So, if you want to know what Patrick thinks and you didn't find out listening to him for a half an hour, go to his website and read his newsletter. Okay. And Patrick, I wish you great success there in Pompano Beach, Florida. Good luck. Spread the word about Face, and yeah, maybe put this interview on your website if you like it. And good luck the rest of the fall and throughout 2023. I'll see you in the room.
Dale, thanks for having me. Blake, thanks for putting this on. Team, thanks for being there every morning. Yeah, for everyone who's listening, tell your friends they need to get on here.
Patrick Bulger, everybody. I
Thanks
tell
so
you what,
much.
you could have been a CIA guy. Because I can usually get people to someone typed in tough nut to crack. So anyway, you leave uncracked, Patrick. So congratulations. But
Thanks.
you did an interview with me, so you're now my trading warrior brother. And you know
I
what,
love
guys?
that.
And you know what, guys? Anyone who's here or listens, and you're part of the community, or you're a subscriber, and you want to give back to the community, I'd be more than willing to, set something up for you to share your work with your brothers in arms. So you just started a new trend, Patrick.
Hey, well, thanks. Thank you. Thank you for being here. never stop being you, please. It's greatly appreciated.
You're okay. Well, not many will agree with that. You're a contrarian on that one. Anyway, thank you, Patrick.
Awesome.
Good hunting.
Thank you.
Good hunting, buddy.
You
All
too.
right, everyone. You could join the team in 15 minutes on the Morning Edge for some actionable ideas, and I'll see everyone tomorrow. It's TGIF. Okay. See you guys.
Thanks so
Don't just
much,
count
Dale.
your pips, count your blessings. And thank you, Patrick.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.